A very good morning, ladies and gentlemen, and welcome to the second day here at Hong Kong FinTech Week, right here at Asia World Expo. My name is Robin Lam-Sam, and I'm delighted to be your host today. Now, we have a lot of very interesting programs lined up for you with panel discussions, keynote speeches, and thought-provoking fireside chats on a wide range of topics. But before we begin, do remember to download our event app, Hong Kong FinTech Week 2024, for networking purposes, to view our conference programs, speaker bios, and panel synopses. You would have received an email containing details about the Brella app, and if you require further assistance, we do have an event app help desk outside in the main corridor. At the same time, simultaneous translation is available at Hong Kong FinTech Week, with headsets available to the side of the stage. Channel 1 will be for English, and Channel 2 will be in Mandarin. So now let's kick off today's program. Please welcome Mr. Clement Cheung, Chief Executive Officer, Insurance Authority.
Hey, good morning. Welcome, everybody. I'm not sure you remember me, but I do miss you. So welcome again to this event. Now, learning from the experience last year, and also, trying to do a little bit of a innovation. We actually tried and developed an AI-generated clip of myself to tell you a little bit about the insurance market of Hong Kong. We did that already, but after Evelyn yesterday, in case you're not aware, Evelyn is an idol created by the Secretary for Financial Services and the Treasury to do a dialogue with him. Young, beautiful, intelligent. So I thought we might as well put that away for a while. But in case you want to look at the deep fake of me, go to our booth. Look at that television. In case you miss it, it's on the bottom left-hand side, very innocuous. There's a face of mine speaking. Now, I can tell you the blinking and the lips are the giveaways, but that particular clip was developed by a French startup based in Paris, I think, but opened up a branch in Hong Kong. Now, they won an award last year. I'm not supposed to give you the name, but they managed to do quite well here, and we have engaged them. So in case any one of you have this particular thought of yours, trying to see whether Hong Kong is the right place for you to do business, find out more. This is the place, and go for it. Now, don't be overawed by this topic. I'm a regulator. A regulator's life is boring. We don't get things which come new every day, in case you'll be in trouble if I do that. Our lives get a bit more exciting when we go out and do search warrants, enforcement actions, and start giving out big fines and disciplinary actions. I'm sure that nobody here wants to hear any one of that. But so what I'm going to do is to try to make things a little bit more interesting, but yet stick to the kind of things that we have told you last year. So I'm going to give you an update of what I have already narrated last year, and I'm going to give you a little bit of flavor towards the end about what we're going to do in 2025. Now, those of you who were here last year remember that I focused on two themes. And the two themes last year were climate risk and cyber risks. Now, this year, we have made this slide a bit more, gave it a bit more depth. Now, these are 5 different risk categories with 2 subcategories. And these are authoritative. They are all quoted from the World Economic Forum Global Risks Report. They are still very much climate and cyber, but they have now become environmental and technological because we believe the perimeter has gone wider. And if you look at the kind of things that we're showing, we're actually looking at evolution of risk. We're looking at risk that goes beyond what we said last time. Now, we still have climate change, and therefore you're seeing a manifestation of that in terms of extreme weather event. I'm going to cover more on the next slide. But what does that do to you after the event? You're seeing more stress being imposed on Earth systems. You see about diversity loss, ecosystem attrition. Those are more long-term. In fact, all these 5 risks feature in the top 10 long-term risks, which is quoted by the WEF. And these are risks which are going to affect us in the next 5 to 10 years. Now, on the right-hand side, of course, we have cybersecurity incident, but we have a new momentum coming through. This is AI, which is the theme of this year. So what this slide telling you is that what we have cited last year is still very much relevant. And in the final slide of this particular presentation, I'll tell you that we believe that we got it right, and we're going to have to still focusing on these. Now, so how are we doing? I'm going to give you an update on all these risks. What this is going to show you is basically fire and water. Fire means temperature. So you look at this world map. In fact, in 2023, 24 countries or economies on this planet have either broken or matched their hottest weather. Now, Hong Kong's no exception. In fact, I believe that 2023 was the hottest year on record for Hong Kong. Now, if you look at that map, we have highlighted mainland China, 52 degrees. I don't know where it is, but it's horrible. Hong Kong, 41 degrees. But you look at that map, there are a lot of places which experience temperature higher than 40 degrees. You look at Vietnam, you look at Thailand, you look at Laos, Turkey, Chad, Albania, Vatican, and in South America, you're seeing Brazil, Peru, and Morocco. So all these, you're talking about temperatures in the 40s and some in the 50s. You can imagine the kind of impact this is having on people's daily lives. I can tell you later on that it goes even beyond that. It's not just about switching on your aircon, staying at home. There are more long-term impact. Now, so that's the fire. How about the water, the sea level? So in case you're not getting very hot, you could get very wet. Sea levels have risen by 10 cm since 1993. It might not affect us in Hong Kong that much, but I've been to some island states. I've been to Mauritius, for instance. If you know what's going on in Mauritius, you'll know the kind of repercussions that people are facing. The whole nation could be inundated, and they're building artificial islands, building high-rise buildings, moving people into those buildings for the sake of preserving their daily lives. So both sea level and temperature is very real. It's not abating, it's getting worse. Now, this slide, again, I've shown it last year, but it's very interesting. We've got more observations on the right-hand side, but look at the protection gap, which is defined in terms by the difference between economic losses and insured losses. Now, for the world itself, not much of a difference, 53% against 60% in terms of protection gap. For poor old Asia, we're not doing anything better, but we're not losing more, but 84% still not satisfactory. But look at the reverse of fortunes between North America and Europe. Why is that? America seems to be doing much better this year because the losses are less, both in terms of economic and in terms of insured losses. What does it mean? It could mean that they have built more facilities or infrastructures to ensure that they have more operational resilience, so people can actually either prevent or mitigate the risk much better. But look at Europe. The protection gap has gone up to 75% because of huge losses which are not protected. Now, if you think about what happened last year, I just give you a kind of summary. New Year's Day, we've got earthquake in Japan, and then we've got earthquake in Taiwan. We've got tornado in Guangzhou, which is a few hundred kilometers north of Hong Kong. We've got a couple of typhoon, hurricane, storm, whatever you call them. Storm Boris in Europe. You've got Typhoon Yagi that hit Hainan and Vietnam. We've got this very tragic flooding in Kathmandu, in Nepal. And most recently, even as recent as last week, we're talking about Typhoon Trami in Vietnam in October. And Hong Kong was hoisting a typhoon signal last week. This is the kind of thing that you're looking at. We have a weather pattern which is pretty unpredictable. And in the case of Europe, if you read the news, there are more what we call normal events. We've got hailstorms, we've got thunderstorms, and there's a new term called convective storms, which means they're basically just rain and thunder. It occurs not as a catastrophe, but as a normal day event. But it creates certain risks that you're not prepared for. In Hong Kong, in case you live here, you remember that we had a couple of very interesting power outages. We have what they call voltage dips, which means that electricity didn't cut off, but suddenly the voltage went down. So in Hong Kong's case, we have many high-rise buildings, so the firemen got very busy because all the lifts got jammed, and business got disrupted. In Europe, some of that is the cause. So we're looking at a situation which is highly dynamic and highly unpredictable. You're looking at frequent nat cat events, sorry, not nat cats, but extreme weather events. But they don't happen all the time. Like this year, Hong Kong, I think we're actually pretty comfortable. If you look at last year, September, we've got black rain for 16 hours, and if I remember correctly, in 1 hour we had 6 inches of rain, 6 inches of rain in 1 hour. Now, so we've got to be very alert to this. Now, on the right-hand side, it's just telling you a little bit about what it will bring to you. Now, we've got all these things which are either happen pretty normal, but will hit you when you're not prepared, or there are things which you know, but yet it's too big to handle. For insurers, claims that hit you without warning, claims that you can't predict because the data are not accurate or adequate. And then what does it mean? That means that the government and individuals, in terms of business or families, will have to pay through their own resources for the recovery. And it makes, in fact, government's fiscal burden become higher. And what does that mean? That means it displaces other more essential social services, be it education, be it medical, be it other. So it affects everybody. Now, of course, there are risks that transmits. It's not just one sector. It could mean that it hits multi-sectors because they have connectivity. Now, just to illustrate that point, this slide came from the WHO. It gives you a flavor of what are the latent risks of all these climate change, extreme weather events. And there are too many words in here. I hate slides with very words. Now, anyway, but I just guide you through it. If you look at some of these risks and impact, focus on those that you are least expected. For example, when I read through it, I always thought that climate change is going to result in heat-related illnesses on the left. But we start looking at it. When I was in Thailand talking to my counterpart, they actually told me that air pollution and respiratory illnesses, in fact, is more of the concern. Now, so temperature actually has an impact on airflow, and it has an impact on people's behavior. Probably they drive more or they switch on aircon more often. In fact, there are other impacts which you don't expect. And then you see there are vector-borne diseases, waterborne diseases, which are, again, something which you wouldn't have expected because these vectors, many of them insects and mosquitoes, they breed in different patterns. You've got more dengue fever now in Hong Kong, in Guangzhou, which is normally in more tropical areas. You're going to have it here. And then on the deep right-hand side, mental and psychosocial health. Now, I didn't realize what it was, but you start looking at the things that I've talked about. For example, people who saw these disasters and the effect they have on people, trauma. And then when I talk about Mauritius, it's an example that I must use. People got relocated from their normal habitat. You've got people who live on a flat island for their whole life now being moved up to an artificial island on a high rise. I was told that there's a serious social stress problem for people who have to go through that particular stage of their lives. Now, so this presents another dimension about how things could affect every one of us. Now, bringing us back to business. Now, so I talk a lot about climate change and all this impact, why you should not think that it doesn't concern you. But last year, I did highlight what Hong Kong can do in its own space to try to help coping with this problem, but yet develop our market to a bigger breadth. Now, I cited insurance-linked security last year. In short, it's IOS. In particular, cat bond. I cited the fact that Hong Kong has itself a small risk pool, but we do have the Greater Bay Area and mainland China itself, which is facing a serious protection gap up to 90 to 95%. We have a very deep and liquid capital market, so this is a particular area that we believe that we can contribute. Now, if we doubt about what we decide to do, the best thing, I believe, look at what the market is doing. The market cannot fool you. In Hong Kong, we always believe the market. If you look at the iOS market, 2023, record size. You're looking at 44 billion US of iOS in total. You're looking at the lower bar, 16 billions of cat bonds. If you look at the last 13 years, which is what this chart means, the cat bond market, 2011, 5 billion. So you're looking at 3.3 times increase in 13 years. And it didn't show you here, 2024, 3 quarters, 13 billion. If you do the math, we should be able to match or even surpass 16.5 billion. So we might have a record year of issuance of cat bonds. So no matter what you do, the market is telling you that we're right. We should go on this track. You look at this 9% compound average growth rate. You look at the kind of increase you see over the years, very consistent. Now, this is another updated chart, which I showed you last year. But again, this one is now a lot more sophisticated. 3 points I want to give you. Look at the left side of that circle. We're trying to build the buy side and sell side. So in the old days, we keep on talking about getting more issuance, but how? So we realized that the first thing we should do is to generate more buy-side interest. Now, if you look at some of these cat bond and iOS issuances, you'll notice that most of the people who are buying them, the institutional investors, they're all from the converted North Americans, European funds. Asia, 1-2% max. So the investors here either are not aware or do not understand about iOS. So if you want to create a market here, and there's tremendous amount of liquidity, you got to make them believe. Now, so last year we actually, my time is running out, but still I quite a few, unfortunately. I've been told that my timing can be a bit flexible, provided that you guys want it. But anyway, so this particular conference that we organized last year is targeted at institutional investors in Asia. We try to generate buy-side interest. And then on the lower left, we're going to have the sell side. We're going to have more product types, more risk types, so the buy and sell side could both generate enough momentum. And then on the right side, that's where you're going to find the sponsors. You've got to create that particular environment for them. And finally, 2 points, which are also quite important. Last year, we talked about our role because we are part of China, but yet we are on a different system. And therefore, we believe we have a good opportunity to get breakthroughs in terms of sharing of data with the rest of China. If you look at it modestly with the rest of the GBA, Hong Kong might be very small. If you combine Hong Kong with the other 10 cities of the GBA, we might have a pretty interesting risk pool. If the data can be aggregated using technology to prevent issues about sensitivity, for instance, we can then have a situation where we can actually write products in Hong Kong or in anywhere else in GBA with a viable proposition. Hong Kong by itself, I do not believe that it's going to happen. But if we can partner with some of our cities in the GBA, we might actually be able to produce products. When we have products, those products can feed the risk into a potential cat bond or iOS, so we can self-generate some demand. And finally, we have not forgotten that Hong Kong is an international financial center. We have Chinese connectivity, but yes, we have to be international. So if you notice the 5 issuances that we made, 2 of them are issued by World Banks. World Bank did it, one for Chile, for earthquake, the other from Jamaica on storm risks. So we are very, very willing to provide subsidy to multinational organizations, international bodies, try to make sure that we do our own bit in helping some of these developing economies. We will continue to do that, and by doing so, we will be able to project the correct image that Hong Kong is indeed an IFC, but with a unique connectivity. Now, I'm coming to the last topic, cybersecurity. Now, starting from the left, that figure is pretty horrible. When I read it, then I knew where it came from, then I never questioned it because it came from the FBI. It came from the WEF, it came from IMF. Now, it means that it will go from 2018, 860 billion to 24 trillion. Now, I'm not sure whether that's going to happen, but if you look at the case of Hong Kong, in 2019, 2020, it's relatively flat in terms of the amount of cases, incidents. But if you look at the losses, 50% up. 2020 to 2021, pretty flat still. Losses went even further up by another 30%. Another 30% to 2022. Again, the cases were relatively stagnant, but look at last year. Cases went straight up the roof, both in terms of losses and cases. In fact, if you look at the last 5 years, you're looking at quantum of losses of about 4 times, 3 to 3.5 times. 4 times, so 4.5 times. And if you look at the number of incidents, doubled. So the situation is worrying. The 3 major threats are botnet, malware, phishing. Now I can tell you, I confide to you that I actually got hooked by one of those. Okay, I'm not going to tell you how, but I actually communicated with that particular individual, and I nearly paid money into an account, which is so stupid of me. I got reprimanded by my own cybersecurity department, But I never failed any phishing test done by them since then. But anyway, that tells you how prevalent it is. In fact, 96% of our companies said they experienced phishing attack. I'm sure that not anybody fell for it. And in fact, just for ourselves, we have regular phishing attack done for our own people. And you get congratulated, well, sorry, no gifts, but you get congratulated if you survive that phishing test. But that is something which is very real. Now, in terms of impact, I'll be short. I just focus on the fact that impact, apart from the things that you know, there are other things which are more serious. For example, spill over to other financial institutions. You might feel that a breach is only affect you, but it's actually could, if your breach is concerning a certain database, you could have consequential effects. And then you're going to have very serious reputational damages. And there are pretty good examples recently in different parts of the world. I won't elaborate. Now, another update last year, I did tell you that we're going to do CRAF, the Cyber Resilience Assessment Framework. We're ready. The 3 stages, I won't elaborate, but I can tell you that, in fact, the guidelines already been drafted, has been approved by our board. The industry has been consulted. We're ready to go in January next year. Now, again, come back to business. In terms of the market, look at the bar and look at the top. Just don't look at the bar alone. Hong Kong is somewhere in the middle. We are not that spectacular in terms of absolute size or premium, but we are doing not that badly on penetration. Our penetration is more or less like Japan, but we are behind Singapore and Australia. So if you look at the why, I asked a colleague why, because I need to face you guys. I have to ask why. I realized that it's a combination of 2 factors mainly. In Australia's case, they have some very, very visible breaches. The 2 which I was told, I can quote, Latitude and Medibank. They are huge, and therefore the regulatory authority reacted. They have imposed a notification mechanism, and therefore that drove insurance up. In Singapore case, no major case, but similar. They have legislated to ask for mandatory notification, and they have lifted the penalty. So in Hong Kong's case, I believe that legislative changes and regulatory requirement will drive the growth. And as I said, even without those, Hong Kong's penetration is not bad. So in case you guys are in insurance, you have to watch this space again. But the challenge in Hong Kong is SMEs, because Hong Kong is basically SME driven. So in terms of the product and the way you approach the market, make sure that you can cater for SMEs, because according to what we know, large companies, 85% have acquired cyber insurance, but SME, less than 20%. So that's where the challenge is, but that's also where the opportunity lies. Now, finally, 3 slides. This is the third last. In terms of AI, insurers are normally very conservative, so they tend to don't tell you when they do things until they are pretty ready. So if you read the news, there are a couple of insurers doing very high-profile publicity on what they do. So we're seeing, in fact, the investment, if you just look at the left side, in fact, although they start from pretty modest amount, but in fact, they're increasing at pretty high pace. You're looking at 2023 to 2024, you're looking at 40%, then you look at 30%, and we are expecting them to go straight up to about 91 billion US in the year 2033, compound growth rate of 33%. Now, in terms of what they do, now the actuaries will love this. The first one, risk modeling assessment. What are they? Imagine climate and cyber. No historical data. Historical data either unreliable or inadequate. So these models can collect data from different sources and assist the actuaries. Actuaries don't look backward, but there's nothing backward. So they need to use this data to do a forward forecast. We have automatic underwriting, which is related to automated claims, which are good, provided what the outcome is. You have robo-advice, which means that your agents will suddenly know you much better. So beware of that. But then you have some things like AI-based mental health support apps. In case you don't know what they are, in fact, if you go to a geriatric home, elderly home, you can see some of those AI in action. You see elderly people being asked to do certain games and the speed with which they do those games will tell the AI to then feed to the institution about how well individuals are doing. So these are good things. And then, of course, fraud prevention, last, but one that we should be doing a lot more. The Hong Kong Federation of Insurers has an AI tool called Insurance Fraud Prevention Claims Database. Unfortunately, the insurers are not subscribing it too energetically. We want more of that. Now, we see all the benefits, but we see all the potential perils. I won't elaborate because of time. But then the consideration we have is that, first of all, we've got to have human in the loop, no matter what they do, particularly automated underwriting. Now, we need robust data governance framework to make sure that data is being used in a disciplined way, and we have to avoid financial exclusion and discrimination. Now, all these also points to the fact that why we have to do CRAF before we do AI. So we have to do the basic defenses before we move on to the AI. So we're going to move to AI in 2025. We are commencing a survey to try to understand what the industry do, and then try to do the regulatory requirement. Now, why do we have to do that? Because we believed, well, at least I believe, when we do regulation, we have to do the 3 Ps. The first P is perceptive. You've got to know what the market is doing. You don't look at what others are doing and then replicate whatever you see happening. Second, you've got to be very pragmatic. What's the point of doing a regulation that people cannot comply with? And third, you have to be progressive. You've got to move reasonably, but you cannot move too fast because people cannot cope with that. And when people can't cope with that, your regulations will not be effective. Now, that's the last slide. As you know, I'm a computer scientist. I graduated when George Lucas finished, or shortly after he finished the Star Wars trilogy. So 2 years ago, I used the Lambda T4A Imperial Shuttle, 3 touch points. Last year, I used the X-Wing Starfighter with 4 touch points. And then my colleagues say, that's not going to work because you can't find anything with a 5 touch point. So we decided to go a little bit modern. We go on Grogu, or the Mediterranean. In case you're not aware, Grogu is not Yoda. He's just the same species. He's 53 years old by now. Now, he's pretty smart. So what we believe is that we've done it right. I've told you that the market said we've done it right. But if you read what the IIS, the International Association of Insurance Supervisors, published last week, this is the 5-year strategic themes for 2025 to 2029. Look at what they are. Climate change, cyber, protection gap. All hits. So we're doing the right things. We will continue to do it. Now, in terms of touch points, we have 5. But the only thing which we have added with Grogu is a supportive regulatory framework. Why supportive? Now, because in the trade industry, guidelines are rules. Compliance. So this particular guidelines, I can assure you, is going to do 2 things. It's going to give you guardrails. It's going to give you guidance. So that guideline is not going to rule. That guideline is going to be something which guides you through, but yet that particular set of guidelines is going to tell you what the perimeter is. So with that, I hope you enjoyed the presentation this year, and I look forward to seeing you next. And remember to go to the booth and look at the lips and the blinking. Thank you very much.
Thank you, Mr. Cheung. Next, we will have a fireside chat titled FinTech in Hong Kong and the Middle East. New Opportunities, with representatives from the Hong Kong SAR government and the Financial Sector Development Program, facilitated by CNN and Forbes journalist Olivia Kinghorst.